Thank you so much for joining us this morning for another fantastic session hosted by the Asia Pacific Financial Wellness Initiative. We welcome you to Financial Inclusion Week 2023, where we have a fantastic panel of three very diverse panelists whom we will be engaging with very shortly. But before we start, I'd like to acknowledge that I'm coming to you today from the lands of the Wurundjeri people of the Kulin Nation, and I take this opportunity to pay my respects to their elders, past, present, and emerging. I'll now hand you over to our co-host, Anna Perera-Shaw from RFI Global, who will very shortly introduce our panelists to you to discuss the theme of today, which is that the future of financial inclusion is here, but how ready are we for the accelerating pace of change? Over to you, Anna.
Thanks, Vinita, and it's good to be here today for a discussion about financial inclusion as part of Financial Inclusion Week. And as Vinita mentioned, we have a great range of panelists today talking about different angles their businesses are taking, and also just different strategies. And the opportunity for digital and data in particular is something we'll be speaking about, and how that can help customers make decisions, but also how it can help them make payments and build resilience as well from a financial perspective. So I'll introduce my panelists at a high level, and then I'll hand over to each of them to introduce themselves and what they're doing in this space as well. So with me today is Joel Larsen, who is the General Manager of Personal Lending at the Commonwealth Bank of Australia, or CBA, Mikko Perez, who is the founder and chairman and CEO of Ayannah, and Alex Hassall, who is the co-founder and CEO of Your Financial Wellness. So Mikko, I might start with you to introduce yourself and give us a bit of background about Ayannah.
Thank you, Anna. So I'm Mikko Perez. I'm the founder and CEO of Ayannah. We're a fintech company that operates in emerging markets. In particular, we started in the Philippines. We're also now in Indonesia. And we started a business focusing on solving problems for the underbanked or the unbanked in the countries that we operate in. And we started out with working with migrant communities. As you probably know, the Philippines has like a 12 million strong diaspora spread all over the world, and it's growing even in Australia as well as in New Zealand, where I'm presently based. And so when we started the business several years ago, we were looking at solving problems with regards to sending money back from all over the world back into the Philippines. At that time, the cost of sending money to the Philippines, if you were a worker in Saudi Arabia or in Hong Kong or in Japan or in the European Union, was roughly 12% of principal amount. So for every $1,000 that you send, you would have to spend like $100. The cost of the transaction was roughly $120 between the sender and the recipient. But over time, technology and market forces have actually compressed that. We were part of that margin compression because by introducing digital means for people to send money back to their families and their loved ones in the Philippines, that spread has actually compressed to around maybe 3 to 2.5% now. So that's how sort of we evolved. But eventually we got to focusing on bigger problems with regards to sort of financial inclusion. In the Philippines, majority of the population is actually still underbanked. I would say up until maybe the pandemic, a huge portion of the population had no bank accounts or basically were transacting in cash. The pandemic changed that, and then we started seeing opportunities to provide financial services through what we call digital and omni-channel means. By omni-channel, we mean that we can actually reach customers, of course, over the web, over their mobile phones, and of course, still over the counter or in person. In emerging markets, that's still very important to have that over the counter or in person sort of connection to the customer or the borrower or the customer, because not everyone is willing to or able to still access financial services through digital means. So since the pandemic, we've focused on building out sort of platforms to allow banks and financial institutions, even credit cooperatives, to reach customers digitally. And the pandemic actually has been our accelerator. Because of the pandemic, a lot of people have had to, by force of circumstances, adopt digital means to reach financial institutions. At the same time, financial institutions had to invest in digital transformation. Um, and so it's actually an exciting time for us. In emerging markets, it's still about inclusion. I know in more developed countries like Australia and New Zealand, it's already about wellness and resilience and sort of, making sure that they get out of debt traps. Um, but I think in particular, I think what is sort of something that we can discuss in common is sort of how do we get migrant communities in Australia and New Zealand and other parts of the world to be financially included in their new home countries. For example, in New Zealand, in just the past 3 years alone, over 30,000 new migrants have been welcomed into New Zealand from the Philippines. These are nurses, people who work in the dairy farms, people who work in retail or hospitality, as well as in building and construction. And I believe also in Australia, there's been a growing migrant community of Filipinos, and also from India and Bangladesh and Pakistan. So while I'm here in New Zealand, what I've been looking at is how do you get them into basically as they start their new lives in these new countries, how do you get them integrated and learn about the financial services that are available to them, at the same time allow them to sort of build up sort of their net worth. So basically guide them on the journey from, as we see it, from being able to borrow money so that they can borrow money for number one, even just for short-term needs. That's the first one. Secondly, maybe for productive loans, like to start a small business, or maybe to pay for education, or to buy cars so that they can go to work. To go through from that journey from borrowing, saving, eventually investing and protecting their assets. So we see that as our journey, or helping them guide them through the journey of borrowing, saving, investing, and protecting. So of course we focus now on short-term credit. Eventually, we're thinking about savings and investment products like microinsurance, as well as giving them access to for example, investing in stocks and bonds. I'll share with you, and this is probably my last sharing. In New Zealand, there's like 5,000 Filipino nurses that are moving into New Zealand. Many of them will probably move to Australia as well. And before they can actually work as nurses in New Zealand, they actually have to spend maybe around 10,000 Kiwi dollars to get certified as a nurse in New Zealand. And so we're working with a startup here in New Zealand who's actually providing education loans to these nurses so that they can, number one, get a job. At the same time, the loan will be basically, in effect, it's not unsecured, but at the same time, because they know that these nurses will get a job once they get certified, the probability that the loan will be repaid is much higher than if they were just lending unsecured. So that's sort of the things that we're doing that's sort of financial inclusion related, but at the same time related to people who are just getting integrated into sort of these advanced economies like Australia and New Zealand. I'll stop there.
No, thank you for that. That's a really great way to start our discussion. And you mentioned a few points there that I think will set the context nicely for our discussion, particularly the role of digital, which I think both Alex and Joel will have some thoughts on how their organizations are using digital to help with financial wellness and financial inclusion. But also you mentioned the topic of lending, which of course, Joel, is quite central to your role and to some of the areas you're focusing on at CBA. So it'd be great to hear a little bit more from you about, firstly, what CBA and what you are doing specifically in your role in the personal lending space. And also, Mikko mentioned access to cars, and I know that's something that you've really been thinking about lately as well. So might hand over to you, Joel, to introduce yourself and also maybe answer a couple of those questions as well.
Thanks, Anna. So Joel Larsen, General Manager of Personal Lending at the Commonwealth Bank, Australia's largest bank, and we have the most Australians with a personal loan need. That really is anything from sort of short-term, week-to-week finance right up to borrowing for a car. One thing that we know is that improving access to affordable and responsible finance is really central to our mission to help customers. The early indicator of access to good finance is going to be around how a customer uses their credit and builds credit responsibly. And so one thing we see a lot of is particularly young people who are the ones needing unsecured or personal lending the most, that they're not necessarily educated or informed on the role that their credit score is going to have on their access to credit in the future. And so that might be inconsequential, inadvertently getting into bad debts. So we call bad debts sort of things that they maybe for really short-term lending that they don't pay back on time or aren't able to keep in control, or having events that impact their credit score negatively. That might be about missing phone bills, not paying utilities on time. This can impact a customer's access to credit and their ability to borrow in the future. It can also mean that they have more expensive credit in the future. So when you've got really good credit and you demonstrate really good credit behaviours, it also improves your access to affordable, lower cost finance, which I think is really important, that we educate customers on the way that they can get that lower cost finance by building good credit and good savings habits as well, as Mikko mentioned. The second point around a car, I find that car and education finance, two really critical things for us. We're really focused on getting where the customer needs us to finance their loan purpose, not just about giving, open loans, but actually really working with our customers to say, what is the thing you're trying to finance? What's the goal you're trying to achieve? When it comes to a car, critical asset for our customers, mostly because it enables them to work, or it enables them to get their kids to school, or gives them, access to all the things they want to do in their spare time. And so really for us, it's about educating customers on good car finance decisions and making it easier for them to access a car through the provision of finance, typically offered in some sort of instalment, whether that's over a year or, all the way up to 7 years, which our loans go up to. And then I suppose just as a build on that, we're also responsible in the sense that there are limits on what kind of car we would offer security against. And that's because we don't want our customers buying cars that might actually end up being completely worthless in the future, but also to help them manage the risk of the changing the car landscape, particularly with the rise of electric vehicles and other alternatives in Australia. So really just to summarise, I think it comes down to really good education up front, access to credit score capability, which we're really passionate about at the Commonwealth Bank, giving customers access to their credit score, showing them where some of the good and bad things, not bad, but challenging things they might have done that has impacted their credit score, and then most importantly, off that, giving them access to all the right tools to make good financial decisions. And if that is because they need to borrow, then we're there to support them.
And that is the perfect segue, I think, to handing over to Alex to talk about financial decision making and goals. So Joel, you touched on the importance of access to tools to help them make good financial decisions, and part of what you mentioned was about goals. Young people, everyday Australians have goals to buy a car or to go on a holiday or fund education. As Mikko mentioned, there's specific education requirements for some fields of work that people are qualified for when they move. So it's interesting to think about how goals are also part of that financial wellness space, which I think really ties in, Alex, with what you're focusing on. So if you could tell us a little bit about your financial wellness and what the platform does, and how goals are part of that, and the point on tools and access to tools to help customers make good financial decisions as well.
Thanks, Anna, and it's great to be here. So your financial wellness, we believe that it's the role of caring financial institutions to improve the financial capability of their customers. So to do that, we created a platform that contains wonderful tools, content around personal finance. But on your point about goals, Anna, what we realised was that simply providing access to a range of tools and content is not really enough, but rather, in order to be effective, financial capability, financial literacy platforms, they need to understand the individual in order to be tailored to that person's specific circumstances. So the way that we achieved that is that we have someone complete the Financial Wellness Index, which was a metric that we created and had validated by the University of New South Wales and the Centre for Social Impact. And that gives someone an understanding about, where they sit on the spectrum of financial well-being. So whether it's they're doing extremely well or whether they're feeling stressed, it gives them an indication of where they're at. But then we go through the process of understanding an individual. So we ask them about their financial goals, their aspirations, their attitudes to finances. And based on that, we then start to deliver content and tools that are relevant to their specific situation. So rather than saying, here's a bunch of information, go find what you need, the approach that we've taken is tell us about you, how you feel about your finances and your attitudes to money. And based on that, we can create a customized journey to financial well-being. But it's really interesting, particularly when you mention goals. We conducted some end user research, so we started speaking with our customers and asking them, how could we improve the platform? What did they find interesting? And what was it stood out for me was a lady in her feedback. She said, I know that, I'm meant to write down my goals. I used to do it at uni and at high school, but then I got into, the real world and I stopped doing it. And it was really a watershed moment for me because it's really stuck out just how often people aren't articulating what their financial goals are. And we know if you're not articulating your goals, you're far less likely to achieve them. But also, and this is, I thought, really interesting, when we spoke to couples that have utilised the platform, what we found was that often there's a disparity when it comes to the goals that people have. So whether that's, timeframes around having children, whether they would like to buy a home. Interestingly, we conducted research of around 3,000 people that were answering questions, up to about 150 questions about their financial situation. And we found that amongst male participants of the survey, there was a bias towards wanting to downsize the home, and female respondents there was a bias towards wanting to upsize. So even there, you can see that there's a difference when it comes to goals. But I think the importance of articulating goals is that it gives somebody an idea about where they want to be. Again, in terms of our approach of understanding an individual, our head of insights, Mike Roberts, he's been in the finance sector for over 40 years. He was actually Westpac's first demographer. But in a former role, he used to analyse about 4 million customers, transactional data sets across the entire mutual banking sector, and it was effectively in real time. And what he said to me was, we always understood what people were doing because we could see from transactional information, what people wanted to achieve. But financial institutions struggled to understand what people actually wanted to achieve. So, they didn't know what people's goals were. They knew what people were spending money on, but they had no understanding really of what their customers wanted to achieve in life.
Yeah, I guess that ties in with the role of data as well, because I think everyone in this call has had experience with data and reviewing the data, and you can look at endless responses and at face value it might mean one thing, but there's all these extra layers to it that I think build out what customers need and what they're really looking for. And I guess if we start sort of torn between starting with the financial inclusion perspective or the product perspective, but Mikko, I might start with you when we're thinking about what Ayannah is doing through use of digital tools. So, you have worked to provide a payment opportunity or access to tools that help customers make payments and send money to family members, which is fairly critical when people are moving and, earning income. And, it's fair to say that customers want their money to be, if they're sending their money, they don't want to lose 10% of it, 12% of it. So what can you tell us about the use of digital to help customers be financially included, but also sort of what your learnings have been, where you've presumably had a lot of learnings around what customers need and made improvements to the offering to really build on what customers have needed and the tools that you offer meeting those needs.
Yes. So let's talk about digital sort of transformation first, because basically that made it more accessible and affordable. Then we can talk about the use of data in terms of like understanding needs and aspirations and sort of making underwriting decisions when it comes to unsecured lending. So on the first part with regards to remittance, basically I think what's really been the game changer over the past 10 years has been sort of the smartphone, and both on the sending side and then the receiving side, more people are basically using their smartphones to access their financial service provider, whether it's a bank or if it's like a cross-border payments company like Wise or Airwallex. And so that's been a big sort of game changer. The other game changer basically is open banking and finally getting banks to sort of share, open up their APIs so that they can sort of have not just they can basically offer their financial services through different partners, fintechs such as us, or even retailers or in that sense. So open banking and sort of the sort of the prevalence of API integration now is becoming more standard than sort of unusual, right? So those are the two things that have really made a big impact, not just in developed countries like Australia and New Zealand, but more so actually in emerging markets. Emerging markets are actually leapfrogging because they don't have those legacy infrastructure. And so the mobile phone, access to the internet, as well as sort of open banking has made that. Now, with regards to, and because of that, people have finally established a digital footprint. This may sound like such a sort of like a weird concept for you guys, living in Australia, but for a lot of people, their digital footprint was non-existent up until recently because everything was done in cash. So now that we have access to transaction data, we can now sort of make better underwriting decisions. So I'll give you an example. Back, before there's an ability to actually do sort of these loans through mobile apps, if people needed a short-term unsecured loan, they would have to pay some very egregious interest rate, because basically the lender, without any data on the person's sort of credit quality or their sort of their asset base or their financial behavior, would just basically, okay, you want a loan, then you'll have to pay 10% a month or 3% a day, and that's been happening. And so so that's why it's so important to get people on board a digital platform, and so they can share their somehow build a history, as Joel would point it out. So build out their credit score and ensure that they maintain a healthy credit score. In the context of what we're doing in the Philippines and Indonesia, what we're doing is now, but the fashionable term now is called embedded finance. So we're embedding finance in what we call fast-moving consumer good supply chains. Like in many emerging markets like the Philippines or Indonesia or India, most fast-moving consumer goods like grocery items are still sold through what we call the informal trade, meaning these are the small mom and pop shops that you may have seen in videos, or if you visited these countries, you'll see them, little mom and pop shops, and most of them are actually run by women micro entrepreneurs. And so, and in some cases, like in the Philippines, more than 60% of fast-moving consumer goods is still sold through this informal channels. So what we're doing in the Philippines is we're partnering with FMCG manufacturers like the Unilevers, the Procter & Gamble's, and the Nestle's of the world to basically embed the financing in the distribution channel or the supply chain, depending on your perspective, to their retailers. So because of our payment network, and we work with thousands of these micro retailers in the countryside in the Philippines, we actually have access to their data, their sales data, because of the partnership with the FMCG. And because of that, we can actually make better underwriting decisions. And basically what that will do is, again, reduce the spread. Meaning, just yesterday, I saw someone pay a 10% interest a month on an unsecured loan for like $600 because they didn't have the borrower was a bit predatory because they had the ability to lend 10% a month. What we're doing is basically by getting more data from the retailer, we can basically offer a loan that's a much lower interest rate because we can basically discriminate in terms of pricing of the cost of the loan, because we know that this person has a better cash flow and everything like that. So it's really key now to get everyone on board, and it's a challenge in emerging markets because some people are not able to, or some of them are not even willing to be sort of digitized. Many of them because they don't want to pay taxes, and I don't think that's a problem in Australia or New Zealand. But so those are the things that we're working on, and because the tools for machine learning, and now that they're using, well, the fancy term is generative AI, but I think basic machine learning tools for basically multivariate regression is all you need to actually make better credit underwriting decisions, right? So these are the things that we're employing, and now that we have access to this, what we call alternative data, like how much rice are you selling, how many remittances are you doing a month, then we can actually make better underwriting decisions.
Thanks for that. And I think that's a good theme for this discussion is almost the way that you can use data to not just provide products and services. Because I think a lot, we often speak about, you can give people financial inclusion tools or financial literacy tools, but it's not necessarily enough to empower them to be resilient, to be confident, to, feel that they have that confidence so that they, feel like they're in control and have that independence, the financial independence, I suppose is what I'm getting at there. So I feel for all three of you, there's that topic that all of your organizations are not just looking at data as a standalone, well, X% of customers do this, therefore the needs are this. I feel there's that extra level where your financial wellness is providing more tailored education tools. It's not just everyone needs to know how to buy a home. They're recognizing that not everyone wants to buy a home. Some people want to buy a car. And then, with you thinking about what tools are required for different kinds of businesses, and recognizing that some people need the face-to-face element, or some, aren't willing to use digital tools. And I think the next question I'd like to ask is for you, Joel, when thinking about an organisation such as the Commonwealth Bank. Digital is such a key element and a key value proposition that CBA can differentiate with. CBA, I would fairly confidently say, is the leader in digital tools and features on mobile apps for consumers. And there's a lot of tools that CBA has tested and launched, and I'd love to learn a little bit more about the credit score opportunity there for helping customers better understand that, but also any other tools and features that CBA or you've been focusing on would be great to understand a bit more about.
Yeah, thanks, Anna. Probably start by saying that in complete alignment with everything Mikko mentioned about the pace of digital adoption, there's kind of At CommBank, at least, I'd say the advantage of having mass distribution or retail branches everywhere, which used to be how major banks in Australia sort of took market share. We're on every street corner and we spoke to every local. The advantage of having that has shifted from being in every physical presence to being in a digital app, and effectively being on the device, or being the most used device, or one of the most used devices, most used applications rather, on the device of the consumer. So basically, the way we think about delivering services to customers has gone from this fragmented distribution, local geography model to actually central digital, in our app. And even when I say digital, it's proliferated in multiple versions. There's, the sort of desktop experience, there's the digital experience that a face-to-face banker can offer you, and then there's the in-app, and then the emerging technologies of that. What I've always found at both at CommBank and at previous employers is that the winning solution is always the one that makes it easiest for the customer. You can face this this resistance about going digital, and there will always be laggards in taking that up. The easier you make it, the easier you make it to do the transaction, do the banking, do the borrowing, the better success you're going to have at ultimately serving the customer. I think the Australian banks in particular are dealing with this dilemma of how easy do you make it, because the market, both locally and I suppose internationally, has faced this huge rise of frauds and scams post-COVID. So COVID brought about this situation where everyone took up became digitally active pretty quickly, whether you liked it or not. You sort of really had no choice. If you wanted to do banking, you needed to engage with online banking or the app, because some of the services weren't available. And we're now at the end of that cycle, and what you're seeing is sort of the rise of scams, fraud, data privacy breaches. And so there's this constant trade-off around how easy do you make it versus how do you protect the customer's data and information. And that's where the friction's going to come for things like point-of-sale lending, or areas where we need customers to expose their data to have a better experience, but they're also trying to protect it at the same time. And as a bank, ultimately, we need to respect our customer's decision, give them the tools to do the thing that's right for them. But that's kind of I think the contention point in making it easier for customers. I think to build on that, though, one of the services we offer is the Credit Score Hub inside the CBA app. We've had over 1 million customers engage with that service. That's 1 million people that we don't know what they were doing with their credit score before, but they're now able to access that. And through our partner at Credit Savvy, they can understand where movements have come from. So whether that's some unknown activity on their credit file or things that they weren't aware of, we're seeing that education increase. Ultimately, the customer benefit is about having a mind of knowing that your credit score is good if it's good, and if it's not, then really giving them the tools to improve their credit score, which I find has been a helpful dialogue for us to have with customers. I think Australia doesn't really, there are some exceptions, but really banks don't have that sort of credit setting that you were talking to, Mikko. So it's really a yes or a no. Yes, in these pricing settings, no, sorry, we can't help you. Now when we're saying no, it's sorry, we can't help you. These are the things you might want to think about in terms of improving your credit score and connecting the customer with the tools to do that. That's one example of a digital tool that customers have engaged with a lot, and they're getting value out of. We're getting value out of it because we're able to help identify our customers' credit score up early, and so it tells us, a higher likelihood of approval, for example, rather than telling customers at the end of a credit application process. And then we've seen digital services that are fully extended using data to help customers do things like save money on their everyday expenses. We're going through a pretty big cost of living challenge in Australia, rising prices, higher inflation, etc. And actually using data and analysing customer spending habits, we're able to point them to things that might actually save them money, whether it be like through our rewards and offers hub, where we partner with There's strategic partners who want to offer a better price to customers, or things like Benefits Finder. They could just be free available services that customers have access to through governments or other agencies. So they're all tools that we're trying to bring into the app. Now, can you imagine trying to get a credit score, an app, a Benefits Finder, find a good deal for a customer in a traditional face-to-face service experience? That's going to be a really difficult thing for a banker to remember to do. It's, in a lot of ways, that's why we sort of had, shopper dockets with deals and offers on the back of them. We've digitized that process to try and bring it closer to the customer. And I think just all of that ladders up to where I think the lending journey goes, which is spot on with Mikko's example, but the whole idea that you get closer to the transaction. If you think as a bank, your customer's going to just come to you and say, give me credit and then I'll decide what I'm going to buy. Actually, we've seen enough digital disruption to know that by having your lending available at the point of sale, or when a customer is making that transaction or in that mindset of buying that thing that they need or financing that thing they need to do, that if you're there, you can make better decisions, credit decisions, but you can also make it easier. And making it easier is ultimately what will drive customer appetite, both now and I think at least into the medium term.
Yeah, great. And I like that example about, it's a very simple one, which is imagine an app versus a face-to-face conversation. What kind of 8-hour conversation would the banker need to have in person compared to maybe I'll check my credit score. It's popped up, enough times that I'll have a look at this, or, actually making that choice to engage with something that they can see is accessible rather than remembering to ask in person about what they then need to do to follow through. Because I think there's, people don't naturally like thinking about finances at a base level. I think particularly somewhere like Australia, I don't think it's always encouraged to talk openly about finances. And there's, often we have conversations about the fact that customers have different histories about finances, right? You might have parents who didn't talk about finances, or finance was a real stress point when you're a child. So it's something that you think the word money and you just want to sit in a dark room. So I think there's a lot to think about with, customers aren't always being irresponsible. Sometimes they don't know what to do because they don't have the toolkit or they don't really know where to start. And I think, Alex, would be a good theme for us to think about. With something I'd like to ask you is around what you think works well about the Your Financial Wellness platform, because I think something that there's a real opportunity for is back on this sort of goals topic, or we think about the need for credit. Some customers may not realize that, for example, buying a home is feasible. I think I would say there's quite a significant proportion of the market of young Australians who don't think buying a home is something that is feasible for them. And I think they've been told that by the media and by different people. But what do you think the opportunity is with a platform like Your Financial Wellness, or with a platform that is Your Financial Wellness, to help customers go from it's all too hard, I don't want to think about it, to, okay, well, this is what my finances look like. Actually, here are the next steps I need to take.
Yeah, great question. And just to touch on digital tools, financial inclusion, the OECD recently put out a paper, probably about 12 months ago now, but it looked at, financial inclusion in the Australian context. And so to Mikko's point about emerging markets and, the comment that in Australia, you're not really looking at banking the unbanked. I think it's over 99% of Australians have a bank account. Even in remote Indigenous communities, people have access to banking products, which is fantastic. But what this OECD report found was that when it comes to financial inclusion in the Australian context, probably the biggest barrier is financial capability. And it identified a need for financial institutions to help improve the financial capability of their customers, and to do that through digital tools, such as Your Financial Wellness, but also the tools that Joel's been mentioning as well, which are fantastic. But interestingly, what we found when we recently did some research was that users of the Your Financial Wellness platform had significantly higher levels of financial well-being than a control group of people that weren't utilizing our platform. Now, I've got to say that, that those groups were representative of the Australian community, so we think it's pretty valid. The reason we believe those people had higher levels of financial well-being isn't, I'm sorry to say, because we've done such a fantastic job in educating people and improving their situation, but rather what we believe it's that financially well people understand that they need to avail themselves of tools such as your financial wellness, or indeed the tools that Joel's talking about around credit scores. But unfortunately, people that are feeling financially stressed or aren't financially well, they're not making themselves available to those tools. They're not using them. They're not using them because they want to keep their head in the sand. So I think that there's really a role to play for financial institutions when it comes to encouraging people to utilize, financial capability programs. But one of the problems that we see is that often the consumer has a feeling that maybe they're being surveilled, or that if I tell my financial institution this, will they make lending decisions on the basis of that? So therefore, I'm not really going to be honest with the program. That's where I think your financial wellness stands out, in that we're structurally separated from the institution, and in that way we're independent, we're unbiased, and consumers feel a bit more comfortable utilizing our platform. That's not to say that they can't share the information that they provide us to their financial institution, but pursuant to the consumer data right and open banking, we put the consumer in control of that information and enable them to, if they wish, share it with their bank. In terms of younger people and goal setting, you're absolutely right. So many people put their hands up and say, well, it's just too hard. I'm not even going to try and save for a home. And I do think that, as you said, Anna, is driven by the media, but also it's driven by a lack of understanding. So I think that if people can articulate their goals and realize that buying a home is a realistic possibility, maybe not the home that you want to live in for the rest of your life, but get onto the property ladder, you can achieve it. But it's being able to understand that that's actually a realistic goal, and then putting in place the tools and strategies that can make it happen. So that's things like a financial capability program, but that's also setting up a savings account that's got a favorable interest rate, not just leaving lazy money sitting in a default account that isn't earning the optimal level of interest. In terms of retirement planning, I think a lot of young people don't even consider their superannuation when it comes to their financial situation. We actually find that a lot of people don't even consider it when they're looking at their net worth. But the reality is that outside of the family home, superannuation will be the largest asset that someone has. And the compounding nature of superannuation savings means that if you're not implementing the right strategy from a young age, you're potentially missing out on hundreds of thousands of dollars in retirement. So, for example, if you've got a lot of money in a fixed interest and you're a younger person, it may not necessarily make sense. But a lot of people don't understand this, so that they're not invested correctly within their superannuation fund. Similarly, I remember having a conversation in the middle of the pandemic when the federal government enabled people to access their superannuation. Actually, one of our team received a letter from their superannuation fund. And what that letter outlined was, this is the process to access the $10,000, and it ended up being $20,000. And the conversation I had with this super fund was, obviously there was a legislative requirement for them to do that, but I think there was also a responsibility for the fund to provide information about what impact is that going to have, withdrawing that money, going to have on your retirement outcomes. But they weren't having that conversation because they hadn't had similar conversations with their customers in the past. Really, all they were doing is sending out a statement once a year, and that was the level of engagement that people had with their superannuation fund. So in that space, I think there's really a role for financial institutions when it comes to engaging better with their customers.
It's a good example with super, and I know we spoke about that in the early pandemic with people accessing super early and using it to fund some necessities, but also some customers using it to fund things like gambling or other areas. And, there's this profound impact that has in the future without customers even realizing that. So I think the concept of, making customers realize, or younger customers realize, that there are these options, buying a house, but even thinking about the longer term opportunity to, build those funds for the future, I think has these really, really significant financial wellness impacts and financial resilient impacts as well. The pandemic taught us that any one of us could lose our job at any moment, and I think there's a lot of learnings that have come, and I think there's been some good examples of banks sort of proactively communicating. But Alex, you made a good point that I wanted to ask you, Mikko, about trust, and I was thinking, as a new provider in the market, as a fintech in the early days of Ayannah sort of being brought in, was there any difficulty getting new customers to trust the brand, or sort of get customers feeling like they could try this out and see how it went?
I guess it's also cultural.
Mm-hmm.
So in the early days, we, at least in our remittance products, we found that people, even though they were adopting digital means to send money to their families in the Philippines, they still wanted to have a human interface. So we had to build out basically a customer service of live customer service reps who can actually chat with a migrant worker, whether they were in Korea or in Dubai or in some of them are actually based in Australia as well. So so in the beginning there's still that human interface. I call it high. So I really do believe that it has to be both. Well, maybe maybe sounds like a really old term, but high tech, but at the same time high touch, meaning digital, but at the same time there has to be a human interface in the process, in the interaction with the customer. As the apps become more sophisticated and the user experience and the interface can be more intuitive, or sort of in a way mimic that human interaction, especially now with conversational AI, I think that's going to change a little bit. But I think still the human element cannot be eliminated. I've been interacting with a bot for a crypto trading app that I'm a user of, and it's just not the same, right? It's still not the same, and I actually think that it's not going to be a purely digital experience for a long time. So yes, trust is very important, and everything about sort of integrity of the transaction, protecting the user data, privacy, all of those things build trust. Yeah, very much so.
Yeah, thanks for that. And it's probably something we've all experienced, where, you're having a conversation with the chatbot and you're just thinking, I kind of need a real person to address this. Or, I've had an experience where it's actually answered exactly what we need. So that's really interesting context for that early stage of the journey. And I'm conscious of time, so I just wanted to say thank you for all for all of the comments and discussion we've had. I'll hand over to Vinita to quickly provide some concluding thoughts. But really enjoyed this discussion, and thank you all for your perspective and for your and for sharing everything you've shared today.
That's fantastic. Thank you so much, Anna, and thank you to each and every one of you, Joel, Alex, and Mikko. It has been such a fantastic conversation, and I know some of you have to drop off, but for me, this is a really good way of bringing together all of the academic knowledge on what financial resilience is all about with practical support, because the elements of financial resilience are access to finance, financial capability, having economic resources, therefore an income and employment, actually to be included, as well as social capital, that face-to-face interaction that's so important. And each and every one of you has given practical examples of how that is applicable even today in the world of the future. So thank you so much once again for all your fantastic insights. We are so grateful for your time and wish each and every one of you the fantastic opportunity to improve financial well-being in your own industry. Thank you again.
Thank you very much.